Welcome, everybody. A big thank you to Connect and Wwmstug for inviting me to talk about Business Central. And today, we're here to learn about fixed assets. So it's time for everybody to join the fanfare and really start using fixed assets inside of Business Central. It is used by a lot of folks around the world, I'm sure, but obviously it's probably something you might not have learned about, might not even have heard about it. So it's really time to start using it. So let's take the next 45 minutes. Let me go through a series of slides and kind of give you an overview of the functionality of the feature of the granule fixed assets. And then let's do a little demo. We'll play around with it. We'll make a fixed asset. We'll talk about them. We'll run some depreciation. We'll show you how we add one. So again, let's have some fun for the next 45 minutes. And again, if you've got questions, you can always ask them along the way. And at the end, I always will leave my information. If you want to find me and find myself, you can email me or call me if you've got questions or need help. All right. This is a little bit about myself. My name is Steve Chinsky. I'm the VP of the Dynamics practice at L&L Consulting. There's a little bit about me. Over the past 26 years, I've been doing Business Central, or before that it was Nav, and before that it was Navision. So I've been doing this for 26 years, and prior to that, 16 years in accounting and operations and auditing. So been around the block, both operationally and in accounting and everywhere. There are a couple of my awards, and yes, I'm a Microsoft MVP. So please, if you need to get a hold of me, here's my information. You can always find me. That is my cell number, and if you can always find me on the BC3 Amigos YouTube site, and you can always reach out to me there as well. All right, a little bit about the agenda. I always like to say to everybody, what are we going to learn today? So today we're going to learn about the setups, some concerns, things you have to worry about, the fixed asset card. Let's go through the fixed asset card. Let's learn what it means and how do we populate it. What is a depreciation book? Where does it come from? What does it mean? How does it interact with the rest of the Business Central software? Then we're going to talk about the FA posting groups, and we'll round out our conversation with the fixed asset maintenance. And then we'll do a demo at the very end, right after we finish that. So again, let's get started. And let's begin with setup concerns. And again, there's many places you have to kind of set the system or set the foundation so the fixed assets will work correctly. And let's go through them one by one. So first and foremost, there's the depreciation book. Now, I said we're going to talk about the depreciation book a little down the road here after we talk about our concerns, but this is one area you really need to sit down, have a conversation with your accountant, your controller, your accounting manager, whoever it's going to be, that will help you define what your depreciation book is going to look like. And here you can have a depreciation book that does GAAP depreciation. You can have a depreciation book that does tax depreciation for the state, federal depreciation if you want. And there's various things you can certainly set up that will integrate both with the fixed asset subledger and the general ledger. And again, we'll talk about that a little bit more when we get to the book. We'll go into much more detail. But sit down, take your time, and set up that depreciation book correctly. Depreciation methods. Obviously, we've got a few methods to pick from. You have straight line, double declining. You can have a custom depreciation where maybe you want to do it yourself and you have your own formula. Or, excuse me, you can actually do one that actually employs makers, for instance. There are a lot of small businesses out there that actually will run their books using the maker's depreciation because that's what their tax accountants told them to do when they're actually running their books. They might as well use maker's depreciation. Or you can do both. Again, you can have a set of books that does, or an asset that has 3 different depreciations, as I mentioned. You can have the federal one that does makers, a state one that does makers, and then your GAAP one that just does good old straight line or double declining and those kind of methodologies. And again, you can get the makers table uploaded into Business Central. All you have to do is ask, and if you cannot find it, certainly reach out to me. I will send you over a config package, and you can just upload them right into your system. Now, the third bullet point, integration to general ledger. You don't have to fully integrate the fixed asset module into the general ledger. You can let it be standalone. It does not have to be fully integrated. It's not recommended, but there are people who just want to do things manually, meaning I want to have my subledger over here, and then I want to have my general ledger over here. And you know what? I'll just run a general ledger journal entry to book my depreciation every single month, and I'll get my answers from the subledger. Again, you can do that. Not recommended because of the fact that everything is fully integrated. meaning as you acquire assets, it can be added to the subledger. As you depreciate assets, it can be added back to the accumulated depreciation and depreciation expense in the general ledger. We'll show a little bit about that when we get to playing with the system. The general ledger accounts for posting groups. We all know them by posting groups. So obviously very important to set that up correctly. Sit with your accountant, or if you're setting this up and you are the accounting manager, controller, or somebody in the accounting department, make sure you pick the right depreciation accounts for the right assets. Are you more of a detailed organization where you have building, leasehold improvements, cars, software, equipment, machinery, and so on and so on and so forth? Or you're more of a you consolidate things like furniture, fixtures, and equipment, machinery, automobiles, buildings, leasehold improvements, or something like that. Again, the subledger can break it out into much more detail because you can classify things. But in terms of the general ledger, make sure you pick the right GL account for the right type of asset. And last but not least, or the next three bullets right here on the page, tracking maintenance. Did you know that in the fixed asset granule, you can actually track maintenance? Meaning if I go and get that oil change for my automobile, or maybe I have a Crown forklift coming in, the Crown maintenance guy is coming in to do maintenance on my forklift, or maybe some sort of company's coming in to do maintenance on my air conditioning unit or boiler, you can actually track these maintenance expenses against the asset and also record the next time you need to do a maintenance call. So we all know that let's get an oil change every 3,000 miles. Well, you can actually figure that out because obviously when you bring it in for a change, they'll tell you the next time they think you'll be able to come using the little sticker on the window in the car. Well, you can actually track that and you can look them up inside of Business Central. You can put an insurance policy on your equipment. You can track that, track when the annual renewal is, and track, of course, the valuation and the cost of those. And the property tax reporting. Since we can record fixed asset locations, if you are a company that has assets in many locations throughout the United States or in multi-states, you can actually classify where those assets are located. So when you need to do property tax reporting for your tax accountant, you can just give them the report that says, here's all the assets in these states, and here's the acquisition cost, the depreciation, accumulated depreciation, and the net book value. All right, let's move on. That was a mouthful. Let's talk about the fixed asset card. Now, the fixed asset card, it is where everything obviously will be listed out. This is where the core of the granule, the core of the fixed asset module begins with. Here you have a list of all your assets. As you can see in my example here, I basically am showing you a series of assets. Every one of them is listed with a fixed asset number, a description. Obviously, I've got the responsible employee who houses it. Now, it could be an employee, could be a building, it could be a department. It's whatever you want to make up. This way, in case I want to do a fixed asset audit, internally or externally, the external accountant might want to do an asset audit, if they'll know where to find the asset. Now, I'm classifying my assets, tangible, intangible. I'm picking a subclass, whether it be the car, the machinery, piece of telephone, maybe a leasehold improvement. And I'm also picking that location for the property tax. Where is it located? In what state and what building? Things like that. And again, you can do various things to extend that. I'm using a more of a building methodology. You can actually put the state here, like it's in Illinois in the main office building. You can actually, and again, you set these up in your FA location list. Now, up top on the menu, you have choices to do that, but we're not going to go into that much detail here. I think just like every other area that you've worked in BC, it's the same thing. There's new, you can create new, delete, of course, ones that are in error, and of course, do other reporting here. So we'll stick with that. We'll go to our next slide. Now, here it is, my Mercedes. Now, no, that's not my car, trust me. But here's an asset, the fixed asset Mercedes. And here, in this case, we're looking at this, and we're really trying to figure out what on this card is a necessity. Now, first and foremost, we'll use our number series to come up with our fixed asset numbers. A good description is necessary, in my opinion. In the FA class, there is a drop down. I normally set them up as tangible, intangible, or more of a financial transaction. What kind of financial transactions would I put in here? I might actually put something that might want to be amortized. Maybe I've got goodwill. Maybe I have something, intellectual property that I want to financially amortize over the next 39 years or whatever the valuation might be from a tax perspective. So That's why I have three choices. Obviously, in the subclass, I have various classes: cars, buildings, machinery, leasehold improvement, and so on and so forth. When I do pick my subclass, it will actually auto-populate my depreciation book for me. Because when you set up a subclass, you can actually fill in what values you're going to put in for the depreciation book, for the posting group, and the method there. It will actually fill itself in automatically for you. The FA location, of course, is where it's located. Property tax, very good for property tax purposes and locating the asset. A serial number, I think it's mandatory for anything that has a serial number, because that way you know exactly the asset, especially if you're being audited and trying to figure that out. A responsible person, again, great for laptops, cell phones, things like that you're giving to people personally. The depreciation book section, we'll talk about that in a second, but that actually is where the depreciation is set up, where I'm picking my method, my starting date, and my ending date. So you don't have to fill the ending date in. You can always go from a starting date, type in the number of years, 3, 5, 7, 9, whatever you're doing, 39 possibly, or maybe it's a leasehold improvement, whatever, and then it will automatically calculate your depreciation ending date. If you're going to use makers, the depreciation method is user defined, and you'll fill in what is called a depreciation tax code, that drop down that's blank right there, and you'll pick one of your makers tables. And we'll show that in the demo because it's fun to see how I can switch that around. All right, let's go to our next slide, depreciation book time. So obviously in depreciation books, I like to set up what the company tells me. If the company's telling me we're doing straight company or GAAP, I'll have one company book right out for GAAP. If we are going to do tax depreciation, let's say federal with bonus and state, I'll set those books up as well, just because I'll record those, and then the tax accountant can get a copy of that annual depreciation expense and the accumulated that has been incurred in the acquisitions by the different tax areas, federal and state, accordingly. In addition, of course, to the GAAP, because they're going to probably want a copy of the GAAP ones anyway. Now, the actual book itself here, funny enough, the federal and the state, obviously, they're not integrated with the general ledger. They're more of a standalone system that has no relationship to the general ledger. So therefore, setting them up is pretty quick. And we'll go through that right now, how we set them up. So here's my picture of a typical depreciation book card. As you can see, I called it company. This is my GAAP book. My default final rounding, of course, I'm rounding it to the nearest $10. My default ending book value, I want it to be 0. So I want to make sure that on that last appreciation, my net book value is going to be 0, or goose egg. My disposal calculation will always be net. It's the most optimal choice, but always check it in case you're having something different with your tax accountant. I will allow corrections of depreciation if I make an error, so I can fix everything. And in addition, on the right side there, I'll always use my fixed asset ledger check to make sure that I'm doing things correctly and any errors will appear. I will use my rounding in the period in question in case there's rounding. If it's going out more than, of course, 2 decimal places, I will make sure it's rounded properly. And I will always make sure that the FA, or the sub-ledger, and the general ledger posting date are the same, meaning the two of those transactions will always be in sync. And I'll always think of my fiscal year as 365 days. Now, one of the nice things is there's a lot of people who say to me, Steve, hey, I love that setting. It actually smooths, or it levels out when I post depreciation. There are ways that you can post depreciation so that instead of it being the typical calendar, 31/28, 31/30, and see, it's playing what I call the roller coaster ride. I appreciate a level setting the depreciation. So it will always be 30 days. So things will always be 30 days, 30 days, 30 days, 30 days. And that way, instead of it being 365, it's actually 360 days. So it makes it level set, and it's a great tool. Most people love it. And again, but you can make a personal choice to either use it or not using that setting there. Now let's move on to our next part. Right after the general piece where we just were sitting, we got the integration piece. I spoke to you a little earlier when I was saying, how am I going to integrate this with the general ledger, or what should I integrate this with the general ledger? This is the normal setting that I prefer, and the ones that I do for my customers. I always have the acquisition costs integrated with the GL with the depreciation. I will always do a write down or an appreciation. So if I do something inside of the fixed assets where I'm writing it down or appreciating it, it will book it right back to the general ledger accordingly. And when I certainly dispose of those assets, if I'm selling them physically to somebody who's giving me cash, or if I'm just disposing them in general, those transactions will also integrate with the general ledger, producing, of course, removing the asset acquisition cost and the accumulated, and either collecting cash where you might have a payment or receivable, and of course, recording any realized gain or loss on fixed assets. Again, the write down and the appreciation also will incur any increase or decrease in valuation change, and hit the proper GL accounts accordingly when you do write down or appreciation for assets. Now, when implementing fixed assets, all of these top two will be turned off because you need to set the subledger up before you have to set it up, and you have to reconcile it back to the GL, because remember, if you start today using this, you don't want to integrate immediately. You want to get the subledger set, validate it, balance it to the penny back to your general ledger, and then, of course, then we can turn it back on. So again, it's very important that you do that if you're setting this up for the first time. All right. Remember I mentioned earlier we're going to show this in the demo, but I thought, hey, let's look at those depreciation tables real quick. Here is a set of depreciation tables I set up, and I normally set this up in all the companies that I implement. But this is a set of makers tables. As you can see, for those of you who've been around makers before, and I do write it in the description, here's all my, obviously, leasehold improvements and building dates, 31.5 years. I've got my 5-year mid-quarter Q1, Q2, Q3. There's probably about 30 or so tables, I would say 30 to 40 tables that get loaded. And they actually have the makers table information from the Internal Revenue Service, and it will follow that when you are depreciating your assets. And again, we'll show that in the demo. It's really fun to actually look at that, kind of curious. People get curious. Gee, that's kind of cool how it does it versus the good old straight line method. All right, posting groups. If you live in Business Central, the word posting groups is close to your heart, as with mine. So one thing to look at here is, how do we set up the posting groups? And I mentioned earlier, you take all of your classification, FA classes, get that FA class and subclass in there. I've got my cars, I got my furniture, my machinery, my telephone, leasehold improvements. And here you actually will define the acquisition cost, my accumulated depreciation account, the acquisition costs, on disposal. What am I going to diminish when I do disposals? These two accounts. What's my gain or loss on a disposal? Where is that going to go in the P&L? Okay. If you're actually doing maintenance expense, you actually could record the GL account all maintenance expense goes to, but in most cases, I will not put that in there because most of that will come out of course, if I go do an oil change, I'll pick my oil change account and I'll just apply it to the actual asset. Then you've got the depreciation expense account over here, 9,500, and or whatever GL account will be in the P&L to capture depreciation. The nice part about this is a one and done. You set this up in the beginning, kind of like you do your typical general product posting groups, or your general posting setups, or your customer posting groups and vendor posting groups. You set it up one and you're pretty much done. It is not a lot of information to fill in here because obviously there's only a few columns here, but please make sure you do it correctly. And again, if you're the accounting people, you'll obviously know what GL accounts to put. But if you're somebody just implementing this on behalf of the accounting staff, make sure you check with your controller or accounting manager. Okay, gang. Let's go back to that fixed asset card and talk a little bit more about the depreciation books here, because I think coming back to this is going to be important, at least for showing you what's going on. So here I took my Mercedes, and what I did was I added my 3 books. I've got my company book, I've got my federal with bonus, and I've got my state book. You'll notice in my car posting group filled in automatically by me picking the subclass car. And I'll show you that when we get to our demo as well, how it's already predefined for us. And the straight line method comes in, and obviously I pick my starting date and my ending date, so it knows exactly how many years it's going to depreciate. And it shows a book value. Now, as for the next 2, I picked user defined. Remember I said earlier, when you pick user defined, you're going to pick your table. So in my federal one, I picked my 50% bonus, and on my state one, I've got a Makers 5, built in here. Makers 3 with a mid-year convention. And basically the same depreciation start date, because the asset was acquired on the same day. It'll just depreciate it differently than straight line, and it will only depreciate those each month. Or you can run it you don't have to run it every month, but you have to run the gap one every month to close your books. But the federal and the state, you can run monthly, or you can run it whenever you want. It will only hit the subledger, meaning I can only run reports inside of the subledger for that information, as well as the fact that it will not integrate back to the general ledger. Now, a couple of things I want to talk about up here. Though I put a picture in here that's great, I can always put my original, if I want my original purchase document, maybe especially for a car, you've got your original acquisition paperwork, or maybe if I'm buying anything and I want to keep all of the main paperwork back on the fixed asset card, I can. If I'm purchasing an asset, certainly from a purchase order or a purchase invoice, and I want to keep the paperwork there, that's also possible, because when I drill into the fixed asset ledger, just like every ledger, like a customer or vendor ledger, I can drill back and see that original document from the purchase invoice, and the attachments will already be there. So it'll be one click away, as one would say. So you don't have to have it here if you don't want. All right, moving on. Fixed asset maintenance and depreciation. Some fun stuff to begin with here. All right, let's first talk about the maintenance side of things. From a purchase order, from a purchase invoice, or from an FA journal, or from an FAGL journal, either one, I can record maintenance against any asset. Obviously, 99% of the time, you'll obviously use a purchase invoice or purchase order. Of course, you're gonna, somebody's gonna come in and do a maintenance routine on something, whether it be the forklift or the boiler, I said, or the air conditioner, the cars that need oil changes or with tune-ups and everything. So those kind of things will come on an invoice or a purchase order, and those charges can be recorded. When you do record them, as you can see in my little snippet here of this image, this is from a purchase line. I basically can put in my fixed asset. I can say it's fixed asset number X. I'm going to go out and do some spark plugs and an oil change. It's maintenance because it's an FA type of maintenance. It's for the service of that vehicle, one unit of one, six, X number of dollars here. And then basically it'll create a payable to the vendor. It will record this against the proper GL account. And also it will charge the dimensions it's affiliated with, because the asset has dimensions set up as well. And there's not a problem there. So not only can I see all the cost that it's costing me to maintain an asset in the system, you can just go to the fixed asset card and you can get a statistical total of it, or just run a report that shows you all the maintenance you've ever charged to said asset. I think this is cool. I think it's a cool thing, because a lot of times management always wonders, how much is it costing me to keep the X machine, or how much is it costing me to keep the Y machine? I mean, if you think about it, other than telling an AP clerk, go pull every bill we ever did to maintain, a conveyor belt or something, they're going to have to go rummaging through the whole thing. Well, here I can just go my fixed asset card and there's all my maintenance. It cost me X. I can just literally bring it up on a screen in front of the management person who was doing it, Open BC, and there it is right in front of me. All right. Let's talk about depreciation. I love this part because I think it's fast, simple, and I think everybody should be using this for depreciation. Now, I will say one thing. Everybody knows this. Whether you're coming from an Excel-based version of a fixed asset system, whether using an out-of-the-box only fixed asset piece of software that runs in your in a PC, or wherever you're doing fixed asset from. Maybe it just comes from your accountant, and they say, here's the number, go book this. When we set this up and when we bring all the assets in, we bring in all the acquisition costs from the original date of acquisition. So the system knows exactly when you bought it. It knows exactly when you started depreciation. We let Business Central calculate the entire depreciation stream, or all the years from point of acquisition through a fixed month-end date. So we let it book all the depreciation it was going to book originally if you used BC in the first place. Now, when you do that, you'll obviously run a net book value report, and from there, you'll actually compare asset to asset. Now, in most cases, I will say most of them will come to the penny. In most cases, especially for people who use straight line, there really isn't much of a difference, unless, again, this external package or your accountant does something differently in terms of how they like to do depreciation. In most cases, it will be accurate and to the penny. For those who are not, you might be off a couple of pennies or dollar bills. At that point, you will basically go to the general ledger only, and you'll true up the general ledger to equal your subledger. And then going forward, Business Central takes over, and you're off and running to the end life of each asset from a depreciation perspective. Now, to run depreciation, as you can see, I'm in my company. I would go to my fixed asset list. This is the list page. I will go and click Actions, Other, and Calculate Depreciation. Super simple. And after I click that thing, I will actually go to obviously my option page, just like many other places in Business Central has an option page. I will pick my company book or my GAAP book. From here, I will actually go in, type in my FA posting date, whatever month end I'm doing. Say it's May 31st in my case, in my example. My posting date will be exactly the same. My posting description, I always like to put the month, the word depreciation, and the year. That way, every entry says that. When I look at my general ledger entries, I will always see that when I'm doing some analysis. And I will always click the word insert my balancing account. What that means is the calculate depreciation functionality goes out, looks at every asset, it inserts a depreciation expense line, and right below it, it's the accumulated depreciation expense line. Asset by asset by asset by asset. So if I had 25 assets, that's going to be 25 times 2 entries. If I have 100, there's 200 entries, and so on and so forth. Now, when you click OK, it will go run through, and it will calculate depreciation, and it will put it inside of the fixed asset GL entry, the entry journal, a fixed asset GL journal, and then you'll review it and click post. If you're not using the integration, it goes into the fixed asset journal, you review it, and you post. And again, that's where the separation lies. Let's move forward a little bit here. This is what it looks like in a fixed asset GL journal. Actually, when it finishes, it pops up a message that says, we've completed it. Would you like to see the journal? Always say yes. Don't say no. You'll forget about it. Trust me. Somebody will interrupt you and you'll walk away. The next day, all of a sudden, it'll be sitting here waiting to post and you'll forget about it. Go right to the journal. Look at the journal. You can see everything in here. First line says a fixed asset number 10. It says I've depreciated 1840. The next line is the accumulated, the depreciation expense. So you've got accumulated depreciation expense, accumulated depreciation expense. 9,500 was my depreciation expense account. The reason the accumulated depreciation account does not appear visually is it's the fixed asset number. It's trying to tell you which one it's doing. But behind the scenes, that posting group we set up, it knows the accumulated depreciation balance sheet account that it's going to book to. Okay, we've seen this. We click the post button up top. We can do posting preview. It is allowed here. And it will tell you if there's any errors. There won't be any errors because in 99.9% of the time, it will not create an entry if there was an error along the way, or if you're missing a posting group, or if there's some anomaly. But it will not create this unless you have everything set up pretty well. Now, from a dimensional standpoint, it pulls the dimension from each asset card. So therefore, for those of you who love to have a P&L by department, it will be there. Or you're doing P&L by projects, maybe assets go to projects, they'll also be there as well. So again, click post, click OK, and you're off and running, and it will fully integrate to the general ledger in its entirety. To note, it's a super easy process. It probably takes under 10 minutes to do the whole thing. And one thing to note, you can just put it on your checklist, your month-end checklist, to always run this each month. So for those of you who do it manually now because you get a report from some third party or whatever, maybe you should think about setting up the fixed asset system. And we'll talk about that a little more after the demo. Okay. All right, gang. So here we are. We're going to pick up now. And we got everything connected through. It looks great. If you're watching me, you're obviously seeing Business Central on the main screen now. And let's have some fun. This is my demo company. I call it the Chippendale Snack Company. Why? Because we all need a snack, and we love Chippendale anyway at Disney. So what can I say? I'm a kid at heart. Let's talk about our fixed assets. So we're going to click Finance, and we're going to go to our fixed assets, just like we did in our slide presentation here. And we see our fixed assets. Obviously, there's a lot of, I got some cars, conveyor belts. I've got some office equipment here. I've got a barber chair for Steve because I need a haircut every once in a blue moon. Not. But basically, we have a painting of the BC3 Amigos. So let's go into this one here. And you can see we've got our picture of our painting that's on the wall in the office. of our BC3 amigos. Obviously, if I need obviously a barber chair, I can go in here and we've got our barber chair here. We got being the best asset for our customers' fixed asset. You're learning that today. And that's my barber chair to get that hair back on my head. And again, and so on and so forth. So let's talk a little bit about the setups before we go into this. So we have our fixed asset classes. And again, we can go see the full list of those. I mentioned I do a financial one again, goodwill. I'm amortizing something over time like intellectual property or something, or patents. Intangible assets, things that are not, I can't touch or feel. And of course, you've got tangible assets and things like that. That actually we're going to be talking about the tangible assets today. But don't forget, for those of you who do want to amortize something financially, you can, do that. Those intangible financial assets, like an amortization of a patent or something like that you've got, that you want to amortize over time. You could use this versus a recurring general journal entry that's going to go on for the next umpteen years. The FA, so that's the FA class. Let's talk about that subclass. I mentioned to you earlier, when you set up that subclass, it really brings in a lot of power. So if I pick car, remember, it filled in the class, automatically tangible. It picked my posting group car here. So I actually picked the class here. It picked this tangible automatically. It picked my posting group car automatically from here, right? So it knew how to fill that in when we were playing that game, that when we were showing those before on the screen in the slides. Now, you can edit this list, of course. You can change things. Again, my FA posting groups, you can pick what you want here. And this is a nice little setup. And you can see I've got enough categories to cover everything. Some people say, Steve, is that construction in process? What is it doing here? Well, one thing to note, if for those of you who build buildings, for those of you who maybe have a long-term construction project or something going on in which you want to capture all of the different expenses, like you're just capturing and pooling expenses, you want to create those assets. You could pool those assets and keep putting them in the system. You won't depreciate them because they're in progress. At some point, you'll need to move them from an in progress state to possibly whatever you want to classify it, whether it be a leasehold improvement, or maybe you're building a piece of equipment, a software system like Business Central. You can move them and reclassify them into a master parent asset, I call it, or a master asset. And also then you can start to reset the depreciation to all start on the day you want to acquire them. That's one way of doing it. There are people who like to do that. Some people say, no, I'll just book it into a general ledger account called construction process. And then when it's all said and done, they'll book one fixed asset entry called the project and put the full value in. Again, you can pick and choose. Either way, if you want to track it, like to have pictures and stuff, you can make it an asset and then again switch it over to an active depreciating asset later on. Okay, let's get out of that. Again, my locations, like I said earlier, I do have locations. I'm doing basically the buildings in different places. But you can put the states, like I can put, Illinois production site, or California, the red warehouse, or, South Dakota, the yellow warehouse. And again, you can put all these, and again, for property tax reporting, because then you can just run a property tax report by location. All right, let's have a little fun. Here, I'm going to basically create a new asset because I think it's time to create a new asset. Now, when you're creating an asset, even though I have a purchase order or a purchase invoice, there's a little work you have to do because you have to bring the two systems in, together, or and bring them both, together here. So I'm going to bring them both together. So here's what we're going to do first. I got the invoice in from X, from X company. I just brought a forklift piece of equipment, and I'm going to basically bring it in to my in. So first thing I'm going to do is I'm going to first create an asset card, and then I'm going to go buy it using the purchase invoice system or purchase order. It does not matter. Either way, I will process the action that way. But first, I'm going to bring in my make a fixed asset card. I will hit enter to take the next number in the number series. I'm going to call this the Connect Forklift. I will give it its class. I will call it a tangible asset. I will look up its subclass, and it's a piece of machinery. Give it a second. It could have a serial number. Let's just call it ADC and 123. And the responsible person will be, and again, I can put in, Let's say it's the warehouse worker, production manager, Robin. She's responsible for all the equipment on the floor. Again, if I open up the more here, the other things are the FA location, which does not appear unless you click more. I did not have it as a master level or to appear all the time. So here I'm going to pick my production room. Obviously, it's part of the production office. And of course, everything else is filled in. It's not a main asset or a component. And in this session today, I'm not going to go into that. But if you want to get into main assets and components, certainly reach out and I can send you a lot of information about that. Now we've got our depreciation book. It filled it in straight line, pretty self-explanatory. My start date, of course, again, which it's going to be this month. So I just bought the asset this month. So I'm going to come in and I'll put the actual date. Let's just do the 19th of March. It acquired it, and it's a forklift. It's going to go for about 5 years. As you can see, it's self-calculated it to end in 2030. If I was going to follow makers, we'll jump out and we'll have a little fun here. Let's say this was a maker's asset, and I was told by my tax accountant, yes, do makers on the books. I don't care. Then I'll pick user defined. I mentioned earlier. We'll keep the same date that it's going to start depreciation here. But now I'm going to go over here, and I'm going to find, and I'll open up this full list, and I'm going to find my 5-year. Let's say I'm going to use a 5-year asset. And since it's March, it's going to be Q1. So let's pick a 5-year, again, Q1 mid-quarter. And I'm going to pick this asset right here. Now, if I highlight the line, and I really wanted to know what you were kind of curious what it looks like. If you click edit, it will open up what the actual table looks like. In year 1, it's going to take 35%. In year 2, 26, and so on and so forth, all the way down until it zeroes out and you get less. From a maker's perspective, depreciation is high in the early years, low in the latter years. Whereas straight line is just a continuous number, month after month after month. Tax-wise or makers, most depreciation up front, least depreciation as the asset gets older. All right, well, we're not going to do makers here, so we're going to switch back to our straight line. And we'll put back our 5 years, and it will calculate that. Couple of other things down here. Let's talk about the maintenance section. What vendor did I buy this forklift from? I can go in and fill it in for you ahead of time. Certainly my purchase invoice will tell me that. But again, it's nice to have set up here automatically. So let's go and buy my forklift from my London Postmaster. I know it sounds funny, but that's my vendor. My maintenance vendor who comes in is going to be the same vendor, London Postmaster. The next service date I was told to do is going to be July 15th of 25. And is there a warranty? Yep, the warranty runs out in 1 year, or 03/19/26. And I'm not insuring it right now. I don't have to, but I could. If I do, I will record an insurance entry for this, but we'll stay away from that for this demonstration. If you're curious what the electronic document information, if I want to put the vehicle's license plate in, I can also do that as well. If it was a vehicle, and it does have a lot of information here. It's good to have this information for the purpose of, tracking an asset and knowing a lot about it, especially the license plate and other things, in case you forget if you maybe filling out a government report or a state report and you're like, what's the license plate again? And instead of calling somebody, you can actually just look it up on your fixed asset card. Now, last but not least, I always think we have to import a picture. So let's go and look for a forklift if we can. And I bet you I got a forklift somewhere. Oh, there's my forklift. Took a picture the other day, and there's my forklift. And it's ready to go. This is all set to go. We're ready to go. One last thing. Of course, everybody says, Steve, you forgot the depreciation. I'm sorry, the dimensions, not depreciation. Slip of the tongue there. I'll open up my dimensions, just like I do on a customer or vendor card or an item card, and I'll pick my department. And I'll certainly put the full expense in my production department. And of course, I'm going to do the same code. And I'm all set. So now I'm done. Let's step back for a second. We'll go back to our main menu. Now let's go into purchasing, and let's do a quick purchase invoice. And let's buy this new asset. I'll come in here. We'll click new. We'll pick our vendor from the list. And again, I picked London Postmaster for my demonstration. We will pick, obviously, it puts in today's date, not a problem. Let's put the vendor's invoice number as Connect 1 from the vendor. We'll come down here and under type, we will pick, guess what? Fixed asset. In the drop-down list of the asset numbers, we'll go to the very last one. We'll go to the one which says Connect Forklift. And we'll bring it in. Give it a second. Don't need location code because that's more about inventory. Obviously, we bought one forklift. And let's just call the forklift $25,000. If you go across, you'll see some more information about the asset here. Now, one thing we need to fill in that is listed, and we have to fill this in, it's a requirement, is, and if you go back here, and I wanted to show you this because it's not here, and it is what am I doing here? Am I acquiring this asset? So if I go to my personalization, for those of you who've never seen this before, gear personalize allows me to add or take away fields on my screen. I will click the field button up here, give it a second to bring in the fields. And it doesn't come up, I always click it again because it does want to be stubborn. And from here, again, I can go scroll down and there's going to be a field, not the depreciation fields, but an FA posting type field. Now, normally sometimes people hide them. It comes in hidden with from Microsoft. So if you do see the slashes, it looks like it's almost like scratched out. It's hidden, but it's really there. Just click the diamond and say show. And the reason I say to do this, even though it's filled in correctly with acquisition because it knows I'm going to acquire an asset, I want to make sure that it's filled in correctly. I like to I like to double check my work, as one would say, measure twice, cut once. So you want to make sure that that's filled in correctly, on that FA acquisition. I'm all set to go. I've got my $25,000 asset. It's time to post. I can post, go in, and I'll post this asset. And it says the GL integration must be equal to yes. What has happened? Did I accidentally turn that off? Obviously, this is where if the integration was not turned on because I was setting up my system in the first place, it will warn me to turn it back on. So I'll quickly just sit here for 2 seconds. I will go to depreciation book, DEPRBOO, and it will be the first choice in the system. I'll go to my company book, and I'll scroll down and I'll say, oh, I forgot to turn them back on. So let's turn them both back on. We'll reset that and we'll try one more time. And this time, when we go through, it will process through in its entirety and book this acquisition. Now, when it's all said and done, I'm not going to go to the posted purchase invoice here. We don't need to see it. I will actually just jump right out of the system and I go right back to my fixed asset card. And let's go look at what we posted. And again, if we come down to the last asset, Connect Forklift, we could see that we brought in $25,000 and it recorded it in my fixed asset ledger entry table, just like a customer ledger and a vendor ledger. Here's my fixed assets subledger, and here's the acquisition cost. All right, we've done enough work there. Let's now depreciate. Let's go and depreciate the month of February. So again, I'm on my FA list like you saw in my picture before. Again, if you don't like having this extraneous white space, you could certainly widen the screen, but most people will just click the I button here with the circle, and the fact box goes away, so you're getting more real estate and seeing it more individually. Okay, we said when we did this, we click Action, Other, and Calculate. So here I've got my depreciation set. So let's book February's depreciation. Nice and simple. And we'll book it in February. And I'll change my date to February depreciation, and I will insert my balancing account like I said before. When this is all said and done, I will say OK. And it created 19 journal entries. And you know how I said it's going to ask you, would you like to go open this entry window? And you always say yes, because you don't want to walk away and forget to post this. And here is all the entries. Debit, credit, debit, credit, debit, credit. It's just nice and simple. Creates all my accumulated depreciation and depreciation expense accounts with any related department dimensions. Everything's all good here. I'm just going to click post and let it post through real fast. And if my posting date is not within the range I'm supposed to do, this happens a lot. People who do close the books forget about the fact that when they reset the general ledger setup, whether you're setting the allow from and allow to there or the user setup, make sure you can post to a year that you're about to close. In my case, oops, my accounting manager forgot to let me do my work so I can close the books for February. So let's go look at that real quick. I will go into my general ledger setup. First, we'll check here. And this is only looking at the month of March. So for now, I'm just going to open up 02/01/25, let myself in here for now. Normally I wouldn't do this, but since we're doing a demo, I won't go to the user setup, which is really where the right place for me to do this is, because I want my user to do it correctly. But for demonstration purposes, since I'm the only one ever in my demo database, I'll just open up the window here just to allow me to post this. We'll come back, we'll click post. And it says the posting date is not within my allowed. Now, why would this happen? Obviously, this is happening because if we go back to General Ledger Setup, actually, I'm not going to use the General Ledger Setup. The reason this is happening is because I actually typed the month of 24 and not the month of 25. I've got two periods coming in here. I've got February of 24 in here, and I've got an entry for February of 25 in here. Two separate entries. And obviously, I can't post into February of 24 because guess what? I'm in the month of February 25. So this is why I'm saying you need to go here and look at these things, because if you forget about them, it's gonna not be obviously in the system. Now, for me to make this happen, and again, I will do this properly. I'm going to erase I'm going to go in here and I'm going to allow myself to post to February of 24. Normally this wouldn't have happened, but for me in demonstration purposes, I always like to say, let's get it done right and let's post everything we're supposed to. And again, I know what playing here, and this is more of me trying to teach you things you shouldn't do. Again, make sure you post everything at the time when the time it comes up. Each and every month, we'll let this post through, and of course, it posts through correctly, and it's gone. And again, here's another type of information I want to show you. Now, the book value must not be negative or less than a salvage value on something. Now, why did this happen? Obviously, we need to go look up this asset. It will not post because assets cannot go negative. It's not allowed. Obviously, it needs to balance to zero. So what we'll do here is we're going to go back. We jotted down that asset number. We're going to delete all of these entries accordingly because we don't want this to post through and we want to go investigate that asset. We're going to look up that asset accordingly and say, why is it running negative? And of course, I know it's the conveyor here. It's the one I always book and make play with. But in most cases, this asset looks good. It's got all the right depreciation. It shouldn't be going below 15,000. It should book another 7,000. It's supposed to book. So let's go through and try it one more time. Let's just make sure, and we'll double check ourselves as we go through and run this through. So again, March 19th of 2025, March 19th of 2025, we're going to book 022825, and my bad there, 022825, and again, fixing my dates. I always like to double check myself. We'll say go. We'll say yes. Again, we'll look at the assets. We're going to check the dates. We're only including February here, right? Everybody see February? I mean, I want like double set of eyes. I'm sure if anybody raise their hand, they'll tell me if I'm bad. Everything here looks really good. Let's run a posting preview to make sure that everything looks good to me. And obviously it does. We fixed our problem because we had two intertwined periods. It was conflicting depreciation, and they were making it go negative because I was booking two separate periods here. So I forgot. That's why I said when you do this, click that yes button. That way, when you click post and you say yes, the one thing you want to see is the word successful. So that was that. I love it. It looks really great. That's the demo I wanted to show you. And again, if you're doing maintenance, again, as you saw in my demonstration, that if you are doing maintenance, you can do that really easily after you pick your vendor. And again, you can pick any vendor you want. Let's say somebody's coming in to do a forklift. You can pick your asset here. And let's say I was going to fix maintenance the forklift. If I come to the forklift here, you can come over and of course put your expense in and the information, and then you would put in your categorization, your fixed asset category here, and again you'd pick maintenance, and again fill that out just like the slide show you. I'm not going to post this here because we're running out of time, so obviously I'm going to basically leave us here. I'm going to revert back to my slide deck. All right. Now we've got the slide up here and it says we finished our demo. So guess what, people? Let's go. Come on. Fixed asset is super simple to implement. It's a couple of configuration packages. You can get your assets in, you book your accumulated depreciation, you're off and running. Think about it. Assets tracking, posting depreciation expense, doing maintenance and tracking all the maintenance costs. It's phenomenal. You got to use fixed assets. It's a great, great granule inside of the Business Central software package. I recommend it highly for people to use. Now, how do we move forward? Okay, you loved watching this. I gave you a lot of great information. How do you move forward? Take a physical inventory to add those missing assets. Make sure you got a full list of all those assets. Let's book the acquisition of those assets, create all those fixed asset cards. Then let's run our depreciation expense, catch up it, balance our net book values using the FA journals because we will turn the integration off. Again, practice in a sandbox. Let's bring some assets in using purchase orders. Let's bring some assets in using purchase invoices, and so on and so forth. And if you do make an error, you can reclass assets between various classifications if you have to. Now, let's do some tools. I want to learn more. If you follow these YouTubes, I did a 3-part series on fixed assets. I broke it down into a very slow, almost 3-hour program here where you can learn fixed assets in its entirety. Second, that QR code. That is the fixed asset documentation from Business Central. It hasn't changed in probably, God knows, about probably 15 years because there's a few more features that have come out of Business Central, but for the most part, the documentation is the Business Central documentation. Go to the QR code, download the actual documentation. You can be off and running in 2 seconds. So, with that said, I want to thank everybody, a big thank you, or hank you, whichever you'd like to be. That is my email address. You can certainly honk me or hank me when you need to get a hold of me, and basically send me an email that basically asking me any questions you want about fixed assets, or if you need help building out the config pack, or if you need help saying, did I do it right? Reach out. I have no problem helping anybody anytime, any day. With that said, I'm going to say a big thank you again to Connect for allowing me to do this. And hopefully I'll see you on another educational video. Thank you. Have a good day.